created and what they've found, and so that you can get some transferable knowledge from them as a part of being here to participate in this panel. So I will introduce my panel, and then I will ask them to each speak for about 10 minutes, and like Terry said, there will be 15 minutes for the discussion. So to my far left and your right is Mr. Nigel Baptiste. He's the president of Republic Financial Holdings Limited, and he's a former Trinidad scholar. He's a graduate of the Harvard Business School Advanced Management Program. Mr. Baptiste also holds a diploma with distinction from the ABA Estonia Graduate School of Banking in the USA. And he's a member of this Chartered Institute of Bankers in England, and holds both a BS and an MS in economics from the University of the West Indies. He joined Republic Bank in 1991 after spending 2 years at the Caribbean Development Bank in Barbados, where he was employed as a country economist. Prior to his role of managing director, he served in various leadership positions with the group's subsidiary in Guyana. He serves on a number of boards affiliated with Republic Financial Holdings, Republic Bank Limited, Republic Bank Guyana, and Caymans, and other entities within the Republic Group. So please give a warm welcome to Mr. Nigel Baptiste. To his immediate right is Mr. Vicente Echeveste. Close. Yeah. I told you the extent of my Spanish yesterday, so no one could fault me. He's the Vice President of Products for Visa Latin America and the Caribbean, where he leads the Visa Products business strategy for the GLAC region specifically. Prior to joining Visa, he worked at worked in the banking industry at Banco Internacional SA, now HSBC Mexico, where he was responsible for product development, marketing, technology, and operations with electronic payment methods. Before that, he worked in the self-service store sector at Comercial Mexicana, where his areas of concentration were process efficiency, promotions, and treasury. He began his professional career in the manufacturing sector. Now, he has to bring a completely different perspective to banking and financial services coming out of manufacturing. So we'll look to hear what if any nuggets of wisdom that he can impart to us, having worked in manufacturing. And being primarily in charge of logistics activities and process engineering. He has over 20 years experience and graduated from the Instituto Tecnológico de Monterrey with a degree in industrial engineering, and he holds a master's degree in business administration from the Instituto Panamericano de Alta Dirección de Empresas. So, welcome, Mr. Echeveste. And finally, to my immediate left is Mr. Curtis Martin. Mr. Martin joined the Jamaica National Building Society in July of 2013 as the Assistant General Manager, Treasury and Investment. He currently serves as the Managing Director of JN Bank, the commercial banking subsidiary of the Jamaica National Group. As former group chief financial officer, he oversaw the group's financial performance and provided leadership in matters relating to capital structure, dividend policy, capital raising, and capital allocation across all companies within the Jamaica National Group. Mr. Martin has more than 3 decades in experience in banking, corporate finance, treasury, and investment management. He previously worked in several capacities with the Bank of Jamaica, Pan-Caribbean Merchant Bank, now Sagicor, Capital and Credit Finance Group, and the Jamaica Money Market Brokers. As chairman of the Jamaica Stock Exchange and Jamaica Central Security Depositories from 2006 to 2011, He led the diversification of the organization's revenue stream through the development and launch of the junior stock exchange at JSC Trust Services, JSC Learning Institute, and the Caribbean Exchange Network. Mr. Martin has a master's in management studies from the University of West Indies and an MBA in finance from the Columbia University and Level 2 Association of Chartered Certified Accountants. He serves on a number of boards, including Kingston College Old Boards Association. I'm sorry. Yeah, I'm gonna stop now. Yeah. So I suffices to say, our panel is highly accredited and very experienced, and so we're looking forward to whatever insights they're willing to impart with us today. And so I'd like you to welcome Mr. Martin now. So we will start with Mr. Baptiste, and just so from a matter of housekeeping, he has a hard stop in 45 minutes because he's got a plane to catch to go back. So we really appreciate him taking time to come and speak with us this morning. So I'll turn it over to you, Mr. Baptiste.
All right, thank you. Good afternoon. I think I need to start with a disclaimer. Notwithstanding any accreditations or any experience, I'm not going to pretend that what I'm sharing with you this afternoon is going to be best practices. I have no idea if they are best practices, I don't even know if they are good practices. I think history will judge that long after my career is over at Republic Bank. But what I thought I would do, and I had a brief conversation with Wendy, and I said, well, what exactly am I supposed to talk about? Right? She said, well, just talk about what it is that you do. Right? So I said, okay, I think I will share with you this afternoon some of my own philosophies, some of my own practices that have guided me throughout my career at Republic Bank. As I said, I mean, history will determine whether they're good or not. And if you really want to find out what best practices, we could Google that online and you will find a number of articles. I found one the other day, right, and I shared with our team. So, and I jotted them down on the plane when I was coming across here this morning. And there's a lot, but I'll only share a few of them with you. I think the first one, and I always started from this point, I'm not a very, very religious person, but I do go to church every weekend. And that is enough for me to know that only God was omnipotent. So, therefore, I am entitled to make as many mistakes as I can make, and the people who are working with me are also entitled to make as many mistakes as they can make. I mean, my goal is hopefully that we all learn from the mistakes, and we don't make the mistakes too many times. You know, I always tell them, I say, you know, the first time we didn't know, the second time we forgot, right? The third time anybody can make a mistake a third time, but the fourth time, come on, right? I mean, but the fourth time, really, right? We should have it right. And because of that, and because I know I'm as fallible as the next person, I don't think anything personally. So what it means is that for me, in terms of my day-to-day practice, you know, anybody could challenge me about anything. Okay, we could sit down, we could have a discussion. Sometimes I'm right, sometimes I'm wrong, right? Hopefully I'm wrong more than I'm right, because it means that people around me, okay, can carry this organization forward in my absence, which they will have to do at some point in time. And so I try to encourage them to actually challenge, you know, and it doesn't matter what the level of the staff is. You know, I tell the staff anytime we have a general staff forum that fear is the greatest enemy of progress. You know, people being afraid to either say what they think should be done, people being afraid to challenge the person who might be senior to them just because the person is senior to them. And I tell them, I say, if you're not afraid to challenge me, why would you be afraid to challenge your supervisor or your manager? I mean, of course, talk is cheap, and it is always difficult for people to actually put that in practice. But I think the more you say it, is hopefully over time, and I've been saying it enough, and I think I have seen in the organization that a lot of change as a result of people being less fearful for themselves. Then there are two other things which I've always kind of stuck to, and they have helped me to be a little bit more courageous maybe than I might otherwise have been. And one is that I said to the media once that I don't dwell in disappointment. You know, I just shake it up, shake it off, right, and move on. And again, it just comes back to the whole team of being willing to make a mistake. You know, and being willing to say, okay, fine, well, it didn't happen. You know, we're doing a transaction right now where we're looking to acquire some operations of Scotia. There are a couple of obstacles to it. Maybe it happened, maybe it don't happen. Right? If it don't happen, you shake it off and you move on. There'll always be something else around the corner. So we don't dwell in disappointment, and I know I don't, and increasingly I've encouraged the leadership team, right, and everybody in Republic Bank not to do so. And actually it was very telling that there are two things I told them: don't dwell in disappointment and don't reflect on regret. You know, we don't have no time to look behind. And what was interesting is last year, okay, one of the junior staff members gave me a gift, and there was a cup, and I got the cup. I didn't even look at the cup. Right? I said, you know, that's a coffee cup. I don't drink coffee, so I just put it in the corner there. And then sometime later, I saw them. I said, no, we gave you the cup. I said, thank you very much. You saw what was written on it? I said, now I'm trying to hedge, right? Because I didn't look at the cup. I didn't have a clue what was written on it. He said, no, we wrote on it the same that you shared with us. Don't dwell in disappointment, don't reflect on me. I said, oh, okay, all right, yes, right? But I'm glad that at least some group of staff, they said, took it to heart enough that they went and they actually printed it on a cup. You know? I mean, I would never use the cup because I don't drink coffee, but it's there. And then the last thing I will share with you, and then we'll talk, is to deflect the credit and to accept the blame. I mean, throughout my career at Republic Bank, at the various levels that I've had, you know, I've always looked at it as being that I don't need to get any glory off the back of the people who are working with me. You know, it is much more important that they get the glory. And it is much more important that I am there as a buffer between them and anything that goes wrong. And where it has been useful to me in so many different ways, but particularly one, and that is that the staff, the leadership team and the junior staff always knew I had their back. And they always knew that in order to reinforce that, they needed to let me know when something might have been going off a little bit. Because it's one thing to have somebody's back, but the next thing that when initially the issue raises, you kind of have an expression that you don't know exactly what is being spoken about. So I always tell them, I say, you know, I will support whatever mistake you make. Two of us will have a private conversation about it after, but I need to know. But if I don't know, then when somebody raises it, you know, because I will waffle in the beginning, you know, somebody will then maybe realize that I don't know. Once I know, I can say I was in support of it. Yes, maybe it was a mistake. And we'll accept the responsibility and we'll move on. I use my philosophy about 3-4 mistakes to go forward. And that has given the staff who work with me, and hopefully all of the staff in the bank, the confidence that they themselves will go and they can put themselves out on the line for the organization. You know, that they can take a risk. Because I maintain that the biggest drawback, right, to any organization moving forward is fear. And the more courageous people are in making their decisions, is the more the organization as a whole will move forward with some kind of energy. So that's what I'll say for now.
Thank you. Thank you.
Okay, thank you. Well, I'm glad that the first panelist dealt with the softer issues. So I can look at that. I mean, the financial issues and some of the best practices, you know, that you use to drive shareholders' value or organization respond to challenges and exploit opportunities. And I love to look at two case studies: the Jamaica Stock Exchange and Supreme Venture. These are two leading companies in Jamaica. The Jamaica Stock Exchange was rated by Bloomberg as the top performing stock exchange for the last 2 years. In 2014, the JSE, that's the Jamaica Stock Exchange, listed at $2.50, And then they have a 5-to-1 split, and now the stock is trading at $17. So the investment return has been phenomenal. Now 10 years ago, the stock exchange was not in a very good place. We saw very low trading volumes, and in fact, at one point the executives or the board of directors, they were actually considering the business model of the stock exchange. But we have seen a major transformation, and how did they do that? The stock exchange in 2009 launched the junior market, which is a new trading platform that facilitates trading by medium companies, whereby these companies are assisted in raising capital and to avoid a high debt. And it was not an easy situation to actually it was not an easy task to actually get the junior market going, because there was very strong resistance, not only from the government, because at the time there was a feeling that this new exchange, the fact that new companies would get a 50% tax waiver, would significantly reduce the amount of revenue that the treasury would get. So we saw we had to be involved in significant advocacy, intense engagement of government personnel, intense engagement of the opposition, working with stakeholders, the companies in the market, whereby these companies change their culture of not producing audited financial statements on a timely basis, issues related to the governance, in terms of having an effective board, and through intense stakeholder engagement, we got the government on board, we got the opposition on board to ensure continuity across the administration. We got 34 companies to list. And right now, the junior market accounts for 25% of the total trading volume of the Jamaica Stock Exchange. And that's helped to re-energize the market, because we have seen the main market move from about 88,000 to about 500,000. Also, the stakeholder engagement and advocacy helped to push back opposition by the International Monetary Fund, because the IMF, their view was that there should not be any special concession to any industry. So the advocacy and the intense engagement actually helped to actually ensure that the junior market was a success. And this just shows what companies can do in terms of achieving their objectives. We see where the banks in the Caribbean have been problem now with respect to correspondent banking, issues relating to AML, and there are other issues on the table. To what extent we can actually take the lessons from the Jamaica Stock Exchange to actually get these things done. What we also saw is that the stock exchange also exploited opportunities. The IMF mandated that financial institutions, especially securities companies, should stop carrying assets on their balance sheet. So these securities companies actually shed billions and billions of assets. So the stock exchange, as basically the only neutral partner in Jamaica, actually formed the Jamaica Central Security Registry and trustee companies, and actually provide that services to those companies. So what we have seen now is that the stock exchange, the JCSD, which is a subsidiary of the JSC, is now a cash cow. Pushing up, millions and millions of dollars on a monthly basis. And that has actually made the stock exchange extremely profitable, and that's what has driven the profitability of the exchange. Supreme Venture is another good example as to how companies took advantage of an opportunity. And this could be classified as what is known as a reverse disruption. Because normally you see disruption whereby a small entity comes into the market and provides services or goods in a way that an existing incumbent is not able to offer. But Supreme Venture came into the market with technology, with cash, with distribution, with marketing, and disrupted the drop-pan market. I don't know how many of you are familiar with drop-pan. This is an illegal gaming activity. It's in Trinidad and in Jamaica. We actually bet on numbers. So Supreme Venture actually formalized that operation with their technology, with their marketing, with their distribution, and Supreme Venture is now an $80 billion company.
No matter the industry where we are, all the time, everything that will matter is customer centricity, and always that customer centricity paired with efficiency, operational excellence, if you want to be successful, either on a manufacturing industry or in financial industry as we are today. Based on that, I will take just a minute for you, and we will need a little bit of imagination, but think about what was a credit card 50 years ago, more than 50 years ago, when Bank of America launched the first card. It was a plastic, 16 numbers there. It was actually imitating a dog tag from identification, and the idea was to allow people to shop, because people were leaving presentation cards at restaurants. It came out like, okay, we can give credit to these people. And the first launch that Visa did at that time, Bank of America, it almost was a total failure, because they issued 50,000 cards in the 58 in Sacramento, in California. And after a few months, nobody has paid the amounts that they earned. They forgot to educate the customers, to show how to pay, to manage collections. And the first issue was to educate the people and do collections, and thankfully they solved it. But then think about what happened for the next 60 years. It was the same card, it had the 16 digits, the plastic evolved, the presentation evolved. We moved to MagStripe, took advantage of communications to improve authorizations, because at the beginning it was either taking the risk from the beginning without any formal authorization, or calling and getting a phone authorization that was very cumbersome, very full of friction. Then fraud took over. We moved to MagStripes, from MagStripes to chip. Chip is, if you look at your cards today, most of them have a chip, totally secure technology. But that didn't change until 2008. If you remember what happened in 2008. Well, financial crisis also, yeah. But in 2007, to be more precise, the first iPhone was launched. And it changed, yeah, you're right, financial crisis, it was very financial. But for technology, the important thing was the iPhone. A cumbersome phone, if you think about it. Everybody, I'm sure that most of us had at that time maybe a Motorola flip phone, very sleek, wonderful. Who thought that we would be using these big bricks that we have today with all that functionality? And that transformed the industry. That was the opportunity to develop a lot of functionalities that we weren't thinking about it. And that revolutionized payments also. So after that revolution, if you think what we have tried to do with you in the payments industry, we're working on 3 fronts, and that's what I'd like for you to remember today. We're working on making payments frictionless. If you think about your consumer experience today, in a lot of them you don't think about how you pay. Uber, it's maybe the best example. When you go into a cab, usually you have to pay once you get out of the cab, and maybe you're running for the airport and you have a strain. With Uber, you get into a cab, you get to the place that you're going, and you're out of the cab. And where was the payment? You only loaded once, and you forget about it. And now maybe you can add a tip if the service was good, but it's a very frictionless experience. Also for you, that it's very, very relevant, in e-commerce, because the islands, and we are very happy with that. Caribbean is one. In Latin America, it's a region that is high on e-commerce. A lot of transactions on e-commerce, not only for travel, but for bringing goods into the islands. So if you think about how cumbersome it is to every time load 40 fields of data and then get an authorization and have it, so that's why you have single buttons, why we are evolving the way that you can buy. And also, more and more, if you think about the current generations, you need to make it simple for buying in this thing. I still prefer a whole computer screen, but the younger generations love to buy and do everything in this. And if you think about it, if they have to choose between having a computer or having a phone, they will have a phone, and that's happening across all Latin America. So it's making the experience frictionless, but with security. We all know how risk has evolved. It evolves with technology, and I think that I have always said that risk is a driver of technology. It's the way they find something, we find something, they find something more sophisticated, and we answer up. So one of the challenges that we have, not only at Visa, but at the other brands, is frictionless commerce, either physical or e-commerce, but with risk controls. And that's why we have evolved, and you have heard about the functionalities that we have tokenized and giving special credentials that are not the original credential to certain, the way you buy with the phone, you're using a different credential when you buy with the phone than the credential that you may use when you are buying in e-commerce, the credential that you may use when you are having a car on file. Complementing that with statistical tools, risk tools that allow you to qualify each transaction and take a decision of if it's risk or it's not risk-free, keeping and taking care mainly of trying to do that as frictionless as possible. And the third issue is bringing all these new players to the arena today that are the fintechs. Maybe you, and for sure in Visa, I can tell you that at the beginning we saw them as enemies or frenemies or whatever we want to classify them. These guys coming for our piece of pie. But now they have discovered that they don't have the financial skills, but for us and for you, we have discovered that they bring a lot of innovation and development, but maybe trying to do that in-house is very cumbersome, and we'll send the projects to launch maybe between 12 or 16 months locally, against maybe having a partnership with a financial, with a fintech that can help us launch new products and services in just 4 or 6 months. So what we are trying to do is frictionless, and you will find it all the time. Contactless, that's why we have contactless. Contactless, if you look at it, allows you to pay very quickly, even for $1, with security, and bringing these players that will help all us as industry to solve for new functionalities that will help us be better in servicing our customers. So that's what I will have to do.
Okay, thank you very much.
I'll start with a question for you, Vicente, because I know when this got launched, or when they announced it, I don't know if it's launched yet, but when it announced it, I thought to myself, and I'm so happy that you mentioned the iPhone, because I'm going to go to one of their latest launches, which is their credit card, or their card, okay, or their cardless card, as they like to call it, and whether or not you think that would have the same type of impact on your industry as the iPhone had on the telephone industry.
No, it's a variation of what is going forward. Today, we have the technology to live with a physical card, in the sense that, as with the iPhone or with Samsung Pay or Google Pay, or even if you develop your own NFC-enabled payment method, you can pay with the phone. But we are still in the stage where you want to have a card, and that's why they are launching the card, the physical card, because not all the world is already contactless. We love the world to be contactless. For Apple, it's a way to better build inside their own ecosystem with certain functionalities. But it's not so revolutionary as it was the launch of intelligent phones, of smartphones, more than 10 years ago. Today, if as a financial institution you see an opportunity to have just a virtual card that you can buy it via e-commerce or physical via NFC contactless, you can have it and you can dispose of the physical card. But the reality is that the card that Apple launched is a card that has a lot of benefits in terms of cashback, in terms of functionality, but it's a variation of what it's already on the ecosystem.
So I understand that, but I think some of the other things that they speak about, as far as fees and those types of things, I think, I was wondering, typically in an industry you have someone go out, whether if it's the airline industry or if it's the banking industry, someone comes out and they have a sale or they have this new innovation, and then the others kind of follow in lockstep. And so I know that for an industry like yours, that the fees associated with the balances and the ownership or the use of the card are significant. And whether or not you guys are looking at that as a threat, kind of disruptive threat to your business model.
No, in fact, the card runs over the rails of the current e-payments industry. So the financial model, it all depends on your strengths that you have, but what the brands are bringing, and I'm not talking only as Visa here, what the brands are bringing to the financial system is that connectivity around the world that allows you to do customer-centric value propositions with efficiency where you can compete with the offer that you have. Just at Visa, for example, what we are allowing is the world to do 60,000 transactions per second. So you can build over that, and then you can decide how you position that for your customer.
Okay. Any questions from the floor?
Is the Apple card connected with any card company?
Excuse me?
Is the Apple card, which
The Apple
is
card.
recently launched, is it connected with any card company, Visa or MasterCard?
Yeah, it's a MasterCard card,
It's a MasterCard.
actually, but and it runs on Apple Pay. On Apple Pay, for example, if you live here in the States, you can have your Chase card, your Wells Fargo card, your Bank of America card. But this is like a co-branded with the special features. It's Apple saying the card that I love more as in the Apple ecosystem is this card is Barclays and MasterCard, if I remember well. And it's a co-brand card that you load and have special features because it's part of the Apple ecosystem.
Santa, got a question over there.
Question for Nigel. As we consider the digital revolution that we're thinking about how we use technology, sometimes we lose our way in how we use people and how we develop people, the role of learning and development. And you spoke about what we often refer to as soft skills, but what more so we're now regarding as hard skills. I mean, to talk about leadership and those other things. What do you see as the role of people going forward as we consider the technological revolution that we're seeing? How important is people in all that? Or do you find that people will get left behind in the process? What are your views on that?
I don't think people will ever get left behind in the process. I mean, the interesting thing about banking is, and it's been an old saying about banking from day one, okay? We could all offer the same products, the same services, the same technology, but those were the people that was a little bit different. And it's interesting that, over time, banks have sort of seemingly bring more technology into play, and therefore less people, seemingly, okay? And all that has really done, really and truly, is lose your competitive advantage. Because anybody can invest in technology once they have the right amount of funds, right, at a particular point in time. So at Republic, the people will always be paramount. The technology is a facilitator, right? And the technology has to facilitate the people who are your employees as much as it has to facilitate the people who are your clients. And so our investment in technology in the bank, and we were a little bit slow, right, off the blocks. I don't think there's any secret that even internally we didn't like some of the technology that we were using. But as we go forward, the investment in technology is on the two fronts. How do we make life easier for our clients? How do we make life easier for our employees? So the employees can continue to be the differentiator. between the public bank with all the technology in the world and our competitor banks with all the technology in the world.
I have it on the people question, but this one is for Curtis. Curtis, over the last 18 years, I would say the stock exchange has really transformed itself. So you guys are like a case study in great business, I would imagine. How did you get the people to buy into the vision that you outlaid in order to get the exchange to where it is today? Did they share in the development of that vision? What can you share with us that we can take back to our own organizations?
Okay. I think we have an excellent general manager, that's Marlene Street, and she has played a critical role both internally and externally in terms of engaging the people, the staff members at the exchange, actually drive the innovation, both in product, technology, service standard, and externally in terms of engaging the external parties. I mean, that's investors. I'd say maybe 10 years ago, I said 90% of investment in Jamaica were in fixed income. We have seen a major transformation where, in fact, recently there was an offer wind farm, and I think there had about 30,000 applications. That was the largest number of applicants to the Jamaica Stock Exchange. So we are really seeing where the stock exchange personnel, by engaging internal and external stakeholders, they have been able to really drive the value proposition and have made the Jamaica Stock Exchange, for 2 years, the #1 performing exchange in the world.
This question is to Nigel. Nigel, I've been looking at the progress of Republic Bank for perhaps the past 10, 15 years. You all have I've been following the acquisitions in particular. You all are in Ghana. You recently acquired the bank in Cayman, in active discussions with Scotiabank for the acquisition of their regional assets. And the question I have is, what is the overarching strategy? Is it that the bank plans to sort of list on a larger stock exchange, because there is obviously a cap in terms of monetizing the value of the organization once it remains listed on the Toronto Stock Exchange? So if you can speak about the rationale and the strategy and where the bank is going to go 5 years from today, 10 years from today, because I think there is a sort of limiting factor in just remaining listed on Toronto Stock Exchange.
And you're very correct, Lyndon. So the overarching strategy is to position the bank so the bank will one day be on one of these larger stock exchanges. For that to happen, the bank needs to diversify its asset base and its income streams away from quote-unquote weaker currencies and into stronger currencies. And it also needs to widen the scope of growth that is possible away from economies that could never really probably grow more than 2, 3, 4% per annum to economies where growth could be 7, 8, 9% per annum. So it was those two principal drivers that resulted in the bank expanding into sub-Saharan Africa. Into a market where, if you look at Ghana, Ghana has a total population of 26 million people. Accra alone has a population of between 5 or 6 million people. The banked population in Ghana is probably like 10%. The economy is growing at 6, 8%, whatever percentage it is. So the upside there for the economy is one thing, but the upside for banking is considerable. Because as the middle income drives banking. It's not the rich, and there's never been before. So as the middle income expands, the opportunities for bank expand. And that same consideration is pushing the bank into the Northern Caribbean countries, who are the countries that are really sources of hard currency. The Eastern Caribbean also, because the way how the Eastern Caribbean is structured, that EC dollar is as good as a fixed currency. Because to get 7 or 8 or 9 people to agree to change that exchange rate, God help whoever tries. So the strategy, Lyndon, not now, 5 to 10 years.